Hello guys, Luca Santos here from ACY Securities. I'm the Technical Market Analyst and I'm back today. Yes, we did have the minutes as well, the RBA coming at 2:30. So just a few minutes ago, I tried to be quick on this one. But yeah, I have the minutes just here. And look, things are looking, let's say, great and bad for the Australian. Why is that? Bear with me, I'm gonna explain everything on the minutes for you. But first, give us a thumbs up, subscribe to the channel, and turn on the little bell so every time we post the content, you don't miss the videos. All right. Okay. So first, what's a minute? Well, the minutes from a meeting is basically what they discussed on the meeting of the RBA, the Reserve Bank of Australia, on the day that they choose to maybe either raise or pause or cut rates. And on the first line, we can already see here, as it's meeting today, the board decided to leave the cash rate target unchanged at 4.10% and the interest rate paid on exchange settlement balances unchanged at 4%. So basically what does that mean is that from last month to this month, they didn't raise interest rates. They left it as it is. They left at 4.10% as they raised last month. They didn't raise now. And they explain why they did not raise. They say here that inflation in Australia has passed its peak and the monthly CPI that was last week indicator for May showed a further decline on inflation. Well, if you don't remember, I'm going to refresh your mind here. I came here at the same spot, I think was exactly the same clothes, last week saying that we did had a decline on the CPI. And I did had as well mention that there were a high probability of RBA to pause rates into this month, into July. Why is that? Because, well, if inflation is coming down slowly, it's not coming down by huge points, but it's coming down slowly, we don't have to worry about raising even more interest rates. And they even say here that they are sorry for raising all these interest rates because it's painful for some people that doesn't have a big savings account. It's painful because all the groceries on the supermarket is going up. The property prices, the rental prices are going up. Business are not incentivized to make more investment into the society. So it is painful for those as well. It's not only happy days because you're going to have more money onto your savings account and you're going to be receiving more and more and more. Well, this is good for the economy because we are lowering interest rates, and then maybe in the future, in the near future, let's say 3 to 6 months, we can maybe see further easing into the monetary policy. Well, now I'm going to have why it's good as well, why it's bad as well for the economy. I've told you why it's good because we may have more investments coming into 3 to 6 months. The bad is for Australian dollar because the FDIs, the foreign direct investors, are not looking anymore to buy Australian dollars, to park their money into Australia. So if you get the chart from our AUDUSD or AUD, let's say JPY, AUD CHF, that was the most affected, would say, why is this going down? Because the AUD is on the base. Even I have a short view right now on Australian dollar because they hold it. So maybe for the whole next month, for this whole month, I will be shorting Australian dollar because there's no sense of buying Australian dollar anymore. So, and they even say here, because they always give you hints on what they're expecting to happen, if they're going to raise next month or if they're going to pause as well next month. And they say here, some further tightening of monetary policy may be required to ensure that inflation returns to target in a reasonable time frame, but that will depend on how the economy and inflation evolves. The border will be continue to pay close attention to developments in the global economy, trends in household spendings, as well the forecast for inflation and the labor market. So if we continue to see, they already told us here in the second paragraph that the inflation in Australia has passed its peak and the monthly CPI indicator for make sure it further decline. If we get another month, with a further decline on CPI, then that's it. They will continue to pause. Now, if we see inflation comes up for numbers much higher than expected, then we may be expecting Australia, the RBA, to continue to raise interest rates. All right, so give us again a thumbs up, and I see you in the next video.